Currently, the options market is pricing in a 13% rise between now and year end to the upside, or a 13% drop to the downside. So just from the options market perspective, to the upside, the options market is saying by January 3rd, Tesla will be a $535 stock. Okay, so into almost the mid 500s. Or in the adverse downside scenario, Tesla will roughly be a $411 stock. Okay, now I'm going to be honest. What we've seen today is a great sign for Tesla and a continuation of the upside that we have already been experiencing. Now, here in this video, I will break down the aspects of a gamma squeeze that are currently in play for Tesla, the possibility of a short squeeze that could really get going as early as tomorrow or as soon as tomorrow. This does have to do with the Fed, so we're going to be going over the Fed meeting, what Wall Street is expecting, what I'm expecting, and why I actually think this is most likely, again, nothing can be certain, but most likely going to ignite a broader market rally. Not just Tesla, although I think Tesla's going to far outpace the rest of the markets. I think it's going to ignite the entire markets higher because, in fact, as I mentioned in the last video, you have seen more stocks declining on the S&P 500 than advancing every single day for the past 11 days. This is, in fact, the longest losing streak for the advanced decline line in decades. Okay, this is the worst losing streak ever for value stocks. Like, things are not good right now. Okay, that's the easiest way to put it. So I think tomorrow could be the quote unquote relief that markets need to send us higher into year end. Now, I also think, again, specifically with Tesla, you're going through this gamma squeeze. You're likely to get a short squeeze, in my opinion, into year end. Add this on top of it, and you could really see Tesla explode higher in the coming days and really over the next couple of weeks. So first and foremost, before we get into what the data looked like today as far as the gamma squeeze, what a short squeeze could look like and how this could play out for Tesla, I will also share with you some targets as far as price that I have in mind. Like, are we looking at 500 here? Are we looking at 550? Are we looking at 600 or higher? I will share my perspective with you, my opinions. Again, I'm not a financial advisor. I'm not a financial planner. Do not YOLO your portfolio in weekly Tesla options and then get mad at me. I'm just saying what I think is going to happen. And I have my money behind this in a long-term sense. I'm a long-term investor in Tesla. I don't currently even like the options in Tesla. But hey, to each his own. People are buying them. They are participating in this gamma squeeze. If that is you, congrats. You've probably made a good amount of money. Okay, but I think before we get into all of that, we really have to just sit back and talk about the Fed for a moment. Okay, here's the deal. I explained this in the last video like the dentist. If you're someone like me and you've had horror stories, yes, this tooth and this tooth are fake. Okay, they're not real. My teeth got busted out on the concrete fighting with my brother, which has since passed away. I was 16. Okay. Horror story at the dentist, but it's a great example of this because I know a lot of people also get nervous around the dentist, but it's like you're kind of nervous just to go for your checkup, right? A couple hours before, a day or two before, whatever the timeline is. Even once you get in the chair, before any work gets done, you're already feeling a little bit better because you're already doing it, you're already there. Now, after you get the checkup, and maybe you thought you had one cavity or didn't have any cavities, and lo and behold, you were correct. It was as you were expecting. You're all of a sudden not as nervous, right? That's kind of the same scenario that markets are in right now. I think a lot of the weakness we have seen internally in our markets, which this market is very weak right now. Let's be honest. I mean, some of you guys are going to look at the headline SP, are going to say, you're crazy. How are markets weak right now? Any metric you can look at CNN Fear and Greed Index, look at AI investor sentiment that, was really low. It popped up, went lower again. Look at the percent of stocks trading above their 50-day moving average at 50%. You're telling me right now only 50% of stocks are trading above their 50-day moving average. That's a very short-term moving average. Yeah, markets are not in a great place, okay? Look at the RSP, for Christ's sake. Look at this thing. It's dying. It's going straight down. It hasn't had a green candle in 13 trading days, okay? Things are not great out there. Including today, they were not great for the RSP. But I think it's a lot of that nervousness before Powell. I think the easiest way to explain this is once we get the news from Powell, you're probably going to see a relief rally. You're probably going to see people that say, hey, that wasn't as bad as expected. Okay, why are we so nervous? Here's kind of the deal as well. I think Powell has been very clear with his intentions, with the Fed's intentions, okay? Over the next 3 to 6 months, Powell is really not going to change his stance unless there is a dramatic spike in inflation that looks like it's not going down. We've actually seen some good news out of the recent inflationary reports. Housing is starting to roll over. Car insurance is starting to roll over. We did have some seasonal factors that affected the last report, but when you strip those things out, it was actually a decent report if you're trying to get down the sticky areas of inflation. Again, car insurance and shelter. They both went down on a month-over-month basis in the last CPI report, okay? We get PCE, personal consumption expenditures, the Fed's preferred measure of inflation, on Friday. Assuming the Fed already knows what that is, and assuming assuming it comes in line with expectations, you are expecting a month-over-month decline for PCE. So I think it's a little bit silly, if you will, that Wall Street is nervous about what the Fed's going to say. And you know what do you know what the markets are nervous about, specifically with the Fed? Is raising rates. Markets are concerned that the Fed is going to all of a sudden get super hawkish and talk about potentially raising rates next year. Could the Fed raise rates next year? Absolutely. Anything's possible. Is the Fed going to try to steer the markets that direction at this Fed meeting? No, and I'll tell you why. One, inflation is not really the problem that it looks like, okay, as we just talked about. But also, Jerome Powell made it very clear the last Fed meeting, and I think the markets have forgotten about this. They have short-term memory loss, like Dory on Finding Nemo, okay? Powell made it very clear that they're not going to try to get ahead of tariff policies. They're not going to try to get ahead of government deficit policies before they actually know what they are going to be. So imagine if Trump did put on a bunch of tariffs and there was a lot of inflation. The Fed would have to take that into account. They may raise rates in that scenario, right? What if there's nothing? Then the Fed threatens raising rates or raises rates in anticipation of nothing? No, okay? You're not going to get a Fed that sounds much different than the last meeting, okay? So it's going to be the same old, same old. Now, tomorrow, we do get a summary of economic projections. Now, the summary of economic projections is the dot plot. Okay, so here you have it. This is the important column that people pay attention to. You have the change in real GDP. This is the last summary of economic projections that came out September 18th. The Fed was projecting, well, 2024 doesn't matter anymore, so throw that out. We're not even going to have a projection for 2024 in the dot plot coming tomorrow, okay? So 2025 GDP, the Fed was expecting around 2% for 2025. Unemployment rate, the Fed was projecting around 4.4% in 2025, which was actually up from 4.2% in the June summary of economic projections. So does the Fed raise that again? Do they lower that again? Do they keep it the same? I think that will be important as well. Now, PCE inflation, they actually lowered their estimates. The June summary of economic projections had 2.3%. The last SEP, summary economic projections, we'll just call it SEP, had, which is what a lot of people call it, was 2.1%. So that actually fell in the last SEP, okay? Now, core inflation in the June SEP was 2.3%. In the September SEP, it was actually brought down to 2.2% for 2025. The federal funds rate in the June SEP was projected at 4.1% by the end of 2025. In the September SEP, it was projected at 3.4%. Now, it's probably going to move to about 3.75%. Okay, so they're probably going to move this number upwards. But considering we're still sitting at, after this cut that we're going to get tomorrow, at 4.5%, that would be 3 rate cuts for next year. That is what the markets are currently pricing in. That is not going to be bad news if we get a 3.75 to, 3.8% number for this latest SEP coming out tomorrow. So that's really what you want to watch. Now, this SEP, a new summary of economic projections, will come out tomorrow at 2 p.m. So you will get the pre-written statement at 2 p.m., the new SEP at 2 p.m., and then you will get Fed Jerome Powell on the podium at 2:30. And a lot of the questions that he's going to get asked are going to be kind of defending or breaking down the new SEP. So we're not going to get new information, and the markets are going to be able to breathe a sigh of relief when this SEP does come out. Now, I think the broader markets are going to do well, okay? I think we're probably overdue as is for a rally in the equal weight S&P. You're probably overdue for a rally in small caps. You have seen fear kind of go up into the Fed meeting as well, which is another solid sign of maybe a reversal coming, right? And even this headline here says Dow drops 300 points, heads for first 9-day slide since 1978. Whoever said, Wall Street is like bullish right now, I don't know where you've been, but that's not the case, okay? We have not seen this since 1978, okay? But back to the VIX. The VIX recently hit a low of 12.77. Today you're at 15.18, okay? So the VIX is essentially up $3 in just the last week or so, right? Heading into this Fed meeting. There's fear about this Fed meeting. Afterwards, this fear is going to subside a bit. Yes, I know we have initial jobless claims on Thursday. I know we have PCE, personal spending, and personal income data on Friday. But it's really the Fed this week in terms of the big catalyst for markets. And normally, yes, about 75% of the time, markets go up anyways after the Fed. So I think you're actually in a very good position heading into the Fed meeting coming tomorrow. I definitely wouldn't want to bet that, the losing streak continues to get worse. I mean, you're already at the worst losing streak since 1978. Your time to short the Dow was a long time ago. Your time to, be bearish on markets, I think has passed, at least from now until year end, where after this catalyst, seasonals are really going to kick in. The Santa Claus rally is going to kick in. And I think just from that perspective, we're going higher. Now, for Tesla, I think that means we're going much higher. Oh, and in the news today, Ford, Honda and Nissan to begin merger talks. Apparently, the two firms are looking to operate under a single holdings company and will soon sign a memorandum of understanding for the new entity. And this may have been a little bit of the news today that caused that midday kind of sell down we've seen in Tesla, although things kind of just bounced back within just a couple of minutes. That may have been a reason for it. Now, take a look at the option activity today. You had 352 different trades totaling $1.35 billion with a positive order value of 94%. I mean, I'm forced to be bullish on that. Given the rally we have seen and the continued option positioning, like these are options that were just bought today from hedge funds and institutions. I mean, you're not giving me much of a choice but to expect Tesla's going to go higher. And it looks like the options chain is really ramping up today. Take a look at some of these numbers. These are final numbers for the trading day today. At the 475 call, 45,000 for volume. 20,000 for volume at the 477.50, 77,000 for volume at the 480 call. These are $1,200 options, guys. I mean, these are insane numbers. You have 37,000 for volume at the 490 call. Again, $900 options. expiring by this Friday. But look at that, 161,000 for volume with 60,000 for open interest at the $500 call. And then it just gets even crazier after that. 23, well, I mean, not number wise, but still the activity just continues to pick up. At the 520 call, you have 23,000 for volume, 28,000 for volume at the 530 call, 20,000 at the 540, 36,000 for volume at the 550 call. I mean, hell, even the $600 call by this Friday has 15,000 for volume. Whenever you're seeing numbers like that, and that's including retail, that's including hedge funds and institutions, you gotta be bullish on that. Those are very, very good numbers. Especially as we have a catalyst like the Fed tomorrow that's going to alleviate fear, that's going to give markets a little bit of relief. I mean, that is almost as perfect as a setup as you could possibly get. And that's the reason that I think Tesla stock is about to explode. Now, I also think following the Fed, you're likely going to get a year-end short squeeze in Tesla stock, because at that point, all of the catalysts are over with. Your jobs report is over with. Your inflation data is over with. The Fed's over with for this month. Your retail sales data, your spending data, like literally all of your catalysts are gone after this Friday. But really the big one is tomorrow. And then from that perspective, do you really want to be short in Tesla heading into 2025 when Tesla's going to have what looks to be another great year and really benefit from a Trump regime? I don't think so. The year of robotaxis is not the year you want to be short in Tesla. Okay, and I think a lot of hedge funds and institutions understand that, but I think they are holding on to hope of their short positions actually working for them heading into tomorrow with Jerome Powell. Now, what tends to happen is the markets are really not going to do much for most of the day tomorrow. After that summary of economic projections at 2 p.m., markets will most likely move higher. It happens almost every single time. Powell will come out and speak. The markets will fall a bit, and then they will rally into the end of the trading day. At least historically, that's what happens on these Fed meeting days. Correct, and you do see this year-end short squeeze. Mix that with the gamma squeeze that we are currently seeing, things are going to get pretty damn crazy to the upside. You have 2.76% short interest of free float, $35.72 billion sold short in Tesla, totaling 77.14 million shares. Even today, you had almost 700,000 shares on net that were actually sold short. You had 1.08 million shares sold short today, and 405,000 shares actually covered. That's where you subtract the two, and you get this net change of almost 700,000 shares that were sold short today. That's crazy behavior heading into what looks to be, in my opinion, a very strong year-end rally for Tesla. Now, in terms of where Tesla stock actually goes between now and year-end, and what Powell actually says tomorrow, how good is it? All of these things are going to influence where Tesla will go. Do we actually get a progression of the short squeeze? The rest of this week? Is that next week? Is that the week after that? Is that the first part of January? It's very hard to say with any degree of certainty. If I were short in Tesla, I would be covering on my short position. Okay, at least partially. Like, I'm not expecting 77 million shares to be covered on. I'm expecting maybe 25 to 30 million could be covered on during a short squeeze. Okay, mix that with a gamma squeeze, and you could easily see Tesla above $550 per share. Like, in the 580 to 640 range. And yes, at that point, it's going to be way too far gone. You're going to be way too euphoric. You're going to be due for a correction that you will inevitably get, okay? But from $200 or $471 per share where we are right now to $580 per share is only a 23% rise. Like, we could do that in 2 days. I mean, to get to 640 would be a 36% rise. Considering Tesla's been down for a very long time, as Kathy Wood says, the longer the base, the bigger the break, okay? You could definitely see 640 in the early part of January if all goes as planned. If you see a short squeeze, continued gamma squeeze, if there's no bad news, if Tesla has a really good delivery number coming out January 2nd. Plus, Tesla's RSI is only at 82.8. Tesla's RSI can easily get to the high 80s, like 88, 89, and sometimes into the 90s. I mean, back here in June of 2023, Tesla's RSI got into the 90s, right? When Tesla hit all-time highs before, its RSI got to 95. This was a bit of a short squeeze then. So during a short squeeze, you can get to some pretty extreme levels of being overbought. And if we were to get to like a 95 on the RSI, that would very much be in the 600s, okay? Just to get to that level on the RSI. So, I mean, obviously this is not a base case, 640 that is, but definitely into the 500s is well within reason throughout the rest of this year. Now, again, take that for how you will. The reason I don't like options right now is because you're pricing in a huge move into year end. I mean, currently the options market is pricing in a 13% rise between now and year end to the upside, or a 13% drop to the downside over the next 17 days. That's pretty large, considering we don't really have any catalyst besides that delivery number that we expect to come out on January 2nd. So just from the options market perspective, to the upside, the options market is saying by January 3rd, Tesla will be a $535 stock. Okay, so into almost the mid 500s. Or in the adverse downside scenario, Tesla will roughly be a $411 stock. And that's really why I don't like the options, because to make money, you have to see Tesla fall more than 13%. You'd have to see Tesla like go back into the mid 300s. To make money on the upside, you would have to see Tesla, really break above that 535 level. You'd have to see Tesla like 580 by the end of this year. I'm not willing to put a lot of money on that, just from the perspective of I think buying the shares are better. I think buying the shares make more sense. So it's my perspective. Hopefully you guys learned something here in this video. I do think tomorrow is going to be a very positive catalyst overall for markets, but hey, we'll see. And I've been wrong before. So contact a financial advisor if you have any questions. If you guys want to come trade with us live in real time, every time I make a trade, I send out alerts. Check out that link down below in the description of this video. Have a great rest of your day, and I will see you in the next one.